Many thanks for staying with us. This is Business Incorporated on Channels Television. I am BC Adebayo. Coming up on the program, the International Monetary Fund raises World Economic Outlook for 2017 and 2018. And South Africa's central bank seeks an independent investigation into the KPMG scandal. Plus, Uber invests $20 billion in its new support center in Egypt. Well, we kick off from the markets in Africa, where the Nigerian stock market is pointing southwards at intraday, with the index down 0.28%. The GSE index is up 0.21%, while Egypt's market is down 0.23%. Kenya ended 0.11% lower on Tuesday. And the Gulf markets are mostly in the green at intraday. The Abu Dhabi index is up 0.96%, while Dubai and Qatar indexes are 0.8% and 0.9% higher at noon. The Saudi index is the only one down, with close to 2%. And European stocks are mixed at intraday, with investors monitoring ongoing political uncertainty as the Catalonia independence crisis appears to be easing. For more on the European markets, let's talk to Janelle de Melon, who's at the Frankfurt Stock Exchange. Many thanks for joining us, Janelle. Spanish Prime Minister Mariano Rajoy says the government has agreed to formally ask regional authorities in Catalonia whether it had declared independence or not. And that's after an ambiguous statement from the Catalan president. Well, can you bring us up to speed with this latest development and, of course, how the markets are trading the news?
Yes, we're definitely seeing a bit of a game of political football here in Europe, and European indices are looking flatter after starting quite strongly today, with the exception, of course, of Spain's IBEX. Now, Spain's IBEX has rallied on the news after Puigdemont's speech. It's up about 1% now, and that upswing is mostly being driven by the banking sector, with Sabadell and Caixa both seeing their shares trade upwards around 2%. Those, of course, are the two Catalan banks that announced that they would be relocating out of the Catalan region. This, of course, is because investors have gotten at least half of what they wanted, so they're feeling a bit more optimistic now. What they had wanted, of course, was that Puigdemont hold off on declaring independence and thus pave the way for dialogue with Madrid. And Puigdemont's speech has been interpreted as a sort of de-escalating motion that investors were indeed looking for. But Rajoy's response so far has been to demand clarity, as you said, as to whether independence has been declared or not. But at least investors seem to think that the central government's response still indicates that it is open to dialogues. The central government in Madrid can't be seen to be rejecting talks or walking away. Now, the big question now is whether those talks would be about independence or whether it would be about increased autonomy for Catalonia, which would definitely represent a way forward out of this crisis.
Now, Janelle, let's take a peep at what's happening at the ongoing World Bank IMF meeting, as the IMF is set to release the main chapters of its Global Financial Stability Report today. Is the market looking for this report, and what's been expected?
Well, IMF Director Christine Lagarde is expected to speak today at the Institute of International Finance. But ahead of those remarks, investors have already seen their risk appetite somewhat encouraged by the forecasts that have been released so far. And the IMF is forecasting that an upswing this year and next year could be maintained and sustained. So it's up 0.1 percentage points to 3.6% growth. So that's something quite positive for investors. And that's being driven by a pickup of trade and investor and consumer confidence. So that's definitely a boost after a year of somewhat prevalent global uncertainty.
A German automaker BMW is looking to form a joint venture with China's Great Wall Motor. What will this pact mean for BMW and the German auto industry in general?
Well, that's a very interesting story, but it's the one that's a bit light on details. Now we actually haven't received confirmation from either Great Wall or BMW that this deal will go ahead, but it's basically about building a joint assembly plant in the city of Changshu in China. Now, while we obviously don't know what kind of cars will be built, we can speculate that they will almost certainly have to be hybrid or electric cars, given the ambitious targets that the Chinese government has set. They want, of course, 1 in 5 cars cars on the road on 2025 to run on alternative fuel. Now, foreign car makers would also have to contend with new rules that say that they would have to be able to produce new fuel cars if they want to keep selling traditional cars. Now, for BMW, such a move would make a lot of sense. It already has a tie-up in China with Brilliance, and it's seen some profits from that as well, selling tech and components into the venture. And of course, let's not forget that China is also the world's biggest car market, and these new rules are also creating the biggest demand for electric cars. Now, this year alone, Chinese consumers are expected to buy 300,000 electric vehicles. That is 3 times the forecast in the United States and more than the rest of the world combined. So this is definitely a story to watch for Germany's automotive industry.
Yes, indeed, Janelle. Thanks for those updates, and do enjoy the rest of your day. Now let's see how the markets performed on Wall Street. The stock futures point to little change at the open as investors wait for the release of minutes from the Federal Reserve September meeting, along with a ramp-up for third quarter corporate earnings season. The Dow Jones Industrial Average Futures edged lower by less than 0.1% to 22,778, while the S&P 500 futures inched down to 2,547. Nasdaq 100 futures gave up 0.02% to 6,063.5. And in Asia, the Nikkei stock average hit a 2-decade high on Wednesday, driven by stronger earnings, an improved economy, and a better environment for shareholders. The Nikkei rose 57.76 points to close at 20,881.27, and that's the highest close since December the 5th, 1996. Across the Korean Strait, the Kospi gained 1.1% to close at 2,458.16, while the S&P ASX 200 tacked in 0.59% to end at 5,772.14. Hong Kong's Hang Seng Index closed down 0.36%, and the Shanghai Composite edged up 0.18%.